I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Coming up in this show, I'm going to bring you my opening comments on the markets. Harvey has a sample for you on trade ideas looking at a positive setup in Southern copper. I'll bring you a hot minute on U.S. Treasuries, which may have a bottom forming, and a huge announcement to you where you can see our market condition monitor. This is an amazing new app you're going to love. And then I'll bring you my stock market analysis, a short-term view on the S&P 500, what I think is a fake bounce. Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had several brief attempts to the upside early last week, with sellers dominating until a late turnaround on Thursday. That capped off a previous 10-day sell-off, which saw a loss in the S&P 500 of some 230 points in just that 10-day period, and even more from the peak. That, of course, came in a time period we have designated as a period of risk. Last week's follow-through selling came as investors feared that interest rates were going up based on the tough talk that was coming out of the Fed heads, indicating inflation continues to be high and the job market too tight. So the fight against inflation goes on. Minneapolis Fed President Kashkari came out and said that he fears declaring victory too soon, and that might bring a flood of exuberance, which of course means markets going up, yields coming down, which will make their job even harder. And he is right. I think we'll see the proof of that as markets begin to price in a Fed pause in the next couple of months and commodities soar to the upside. When that happens, of course, inflation won't be coming down. In the meantime, inflation is very high in other places in the world, especially when you look at the Eurozone, where their CPI for the month came out at 9.3% year over year. Wow. When that news came out, that hit the bond market around the world, and stocks moved to the downside on Wednesday. For the stock market, the Thursday reversal and follow-through on Friday came as bonds firmed, and Fed Bostic came out and said he's firmly in the camp of only raising 25 basis points versus 50 basis points that we're hearing from other Fed heads. Also helping the bond market was a big downside move in crypto, which came as there's a collapse in Silvergate Bank, as Coinbase is abandoning it, and Silvergate Bank's a real bank, and they facilitate the transactions in cryptocurrency, a lot of them, and now there is question about that bank's viability. So that helped the bond market also. We'll show you later that this bump in the stock market is in line with some short-term analysis and could be setting up a sharp downside capitulation in this period of risk for stocks. Back several weeks ago, we projected a drop of 300 to 600 points in the S&P 500. That's 30 to 60 in SPY. And that decline seems well in gear. And a few days of a bounce in the middle of this will most likely only invite the sellers back. For investors, this will likely be one of the worst times, or the best times for 23, depending on your patience and approach. Traders will likely love what's going on just now and just ahead. After all, they really tend to do well when the markets move down and love that two-sided trade that occurs when markets decline. So they tend to like it when the market is feeling the greatest amount of pain, and that period of big pain is likely to continue just ahead. For stocks, midday here, major indexes up about 1 to 1.5% on the week. The bond market gains about 7/8 of a point on the 30s. The TNX, the 10-year yields, gain 6 basis points, and I'm going to give you a hot minute on that coming up. So you'll get my analysis on the bond market The gold market, gold rallies $32, silver 23 cents, and I think there is one more drop in there in alignment with stock market liquidation, offering a big opportunity. Dollar fell about 0.2%. I still think there's more upside in there with a pretty good chance at 106 on the DXY dollar index. And the oil market up about 235 on the week. Friday it had a volatile day, moving down sharply and then back up. There were rumors that there's a rift in OPEC and UAE was thinking about leaving OPEC. That was later denied. And our projection for the oil market is it getting up to about $85 in coming months. And you want to see all of our analysis on futures, make sure that you watch Future Speak. And that's a great video, about an hour long every single Wednesday, that RV presents, where you get to see 24 different futures and index contracts. And I think that you're going to love that. So that's the opening of this show. I want you to go to askSlim.com and explore. Take a look around. If you're new, you could really get acquainted, especially if you're an active trader in the indexes, by subscribing to Level 1. That deal is just $45 for 3 months. You get daily information on the indexes. Matt does an incredible job on that. On YouTube, subscribe to our channel. Click the notification bell, and you'll know when we put up videos. And do like this video. Give it a thumbs up. On Twitter, follow us at askSlim. And any questions you have about our memberships, content, anything that we say here in the show, write to Matt at askSlim.com. All right, this is a preview of our trade ideas. We're going to look at Southern Copper. This is a positive idea that RV is going to present to you. He does these trade ideas regularly for levels 3 and 4, and he always puts up a video on them so you really understand the trade planning concepts. And in this bullish idea, I think you're going to really get a sense for that. So RV, show them SCCO, Southern Copper.
This is an askSlim trade idea video walkthrough for a short-term long in Southern Copper, that is symbol SCCO. This is our weekly and daily cycle analysis. Let's go ahead and pull up the weekly chart and walk through this for you. So on the weekly time frame, we have a dominant weekly cycle here, which is then broken up into these minor money flow patterns. And what we see here is a very strong right-hand translation where we've used up this whole cycle rallying. It left a short window of time for a pullback. That is this flag that has formed. And then the highest odds would be that we would move to new swing highs in that next rising phase. So that's what we are looking for here in SCCO. This old high is at 78.76. Very good odds we would move through that old high as well as this old high at 79.32. And if we look back a little bit further, there's this high right here at 83.29. That certainly looks like it is reasonable in this next rising phase here in SCCO. There was a low that was due 220 to 43. You can see that this low formed right on the week of 220, and we are now likely turning back to the upside. If we go ahead and shift our eyes now to the daily chart, you'll see what's happening here on the short term. So what we have here for SCCO is a really bullish overall picture with higher cycle highs and higher cycle lows. This is an indication of a bullish cycle structure. What we would look for under that case would be a new swing high to form in this next rising phase here as well. As I mentioned earlier, that old high comes in at 78.76. Now, we have likely just formed a key short-term low here in SCCO. You can see by these troughs that there was a low that was due towards the end of February. And what happened? We had this sell-off here, and then we are now turning modestly up so far here in SCCO. What we are looking for is for small dips here to be bought quickly and then see this turn up sharply on the upside in SCCO. We currently have a flat ribbon. We do want to see that turn positive to give us an indication that we are now in the short-term rising phase here in SCCO. In terms of our levels, we have a zone that is rising as price makes higher highs, but it comes in 73.16 to 71.16. We don't want to see it back through this old swing low here at 69.79, and we are looking for a move to the 61.8 to the 78.6 from 81.91 to 85.20. Our theoretical risk on this idea comes in around 380, and we're looking for a move of at least $8 here on the upside. Okay, so that's the overall look at SCCO, a very interesting opportunity likely setting up. Now, this is what we do for all of our trade ideas. We share the logic behind the weekly and daily cycle analysis. And this is a great way to understand and see a real-time application of the askSlim methodology. So it's a real cornerstone of what we have done over the years. This service is only available for level 3 and 4 members at askSlim. So if you are interested in signing up for a level 3 or 4 membership, you can go to the askSlim.com website and click on membership options. Thanks again, and I hope you guys have a great day.
Great work on that. Really think that the viewers are going to get a good idea as to how this is a good, positive setup. This is a hot minute. Don't miss this on the Treasury market. This is a hot minute. We're going to look at the U.S. Treasury market and ask the question, is this a bottom in the Treasury market or a peak in yields? Let's take a quick look at here as we look at TNX, the 10-year yields. We had been looking for this rally in here in yields, getting up around that 4% level or a little bit higher. You can see right over there, that one bar, that's an abandoned baby right there. And it says there's a good chance the yield peak has been seen. Momentum in here is still strong, so it's going to need to be able to turn over and give us a sense that peak is in place. The opposite of that, of course, would be the Treasury market. Looking at TLT, which is the 20-year, you can see in here our cycle analysis work, just beautiful harmonics that we see right over here. You could see these minor cycles and how they aligned with the bottoms perfectly, and we had been projecting this decline right over here into this support area from the weekly chart. Now the bottom really looks like it is forming in there with that, again, abandoned baby there, right in support. You could see in here the abandoned baby there that made the top, the island that made the top right over there, and over here an island bottom and an island bottom. This is a pretty good indication. We have seen the peak in the yield market, the bottom in the Treasury market, and I would say this is trying to forge out that bottom right now. We're looking for a rally here for the next couple of weeks in the TLT market, and that maybe really be a reflection of a flight to safety coming because we think the stock market has got big downside risk. That's our hot minute and what looks like a bottom forming in the Treasury market. Stock market analysis coming up, but first, don't scroll forward. You have to see this. This is our incredible Market Conditions Monitor. It's an amazing new app to help guide you to catch the big impulses in stocks, index, and ETFs, no matter your trading style. In fact, there's a setup in there for all trading styles. And very importantly, you can avoid being on the wrong side of those big impulses. That means reducing your risk of big losses. We have extended this now 1 week only, which means that the Market Condition Monitor is included with Level 4. If you subscribe by March 12th to our Level 4 membership, or you're already a member, this is going to be included in Level 4. This is the Level 4, everything that's in here. You can read through this or go to our website and really see what's in Level 4. Multiple time frame charts on our 84 best symbols, our proprietary studies, which we have quite a number of them that really help you. You get our Thinkorswim grid archive with custom charts and all of our best indicators, all of our support resources, and full membership access to Level 3, 2, and 1. This special is going to go on for the next week. This Level 4 is 35% off. That's only $101.25 a month for all of that, including being grandfathered in to the Market Condition Monitor. Questions, write to Matt at askSlim.com. This is a little picture of the market, of one view of the Market Condition Monitor, but I can't do it justice. I'm going to let Matt show you this as he brings you this short video with great pictures and explanation of the Market Condition Monitor.
Hello, fellow traders and technical analysis enthusiasts. This is Matt with askSlim. As you heard from us last week, we are excited to announce our newest service from askSlim That is the market conditions monitor that I have pulled up on my screen right here, or for short, we call it the MCM. It features our cutting-edge proprietary momentum analysis technology. So what I wanted to do in this very brief segment is go have some fun and demo some of the key MCM features that are now in beta. And so we're going to do that. First, you'll notice that there are two different time frame views that we have, or two different views. We have a time frames view, and then we have a trader view. So first I'm going to look at the time frames view, which essentially has an algorithm or two algorithms built into the market condition monitor engine, our reversal scout and our slim ribbon. Both of these are our most dependable and reliable momentum indicators. And we have coded the MCM to be tracking the market conditions utilizing these two momentum indicators all session long in real time. And we have outputs that are generated when there are changes that are occurring. So for example, let's take a look at the 15-minute. And you'll notice that basically, as I scroll down, the bulk of these symbols, when we have, oh geez, over probably 80 symbols encompassing some of the top, most liquid stocks, and then we have our index ETFs, and then we have some awesome broad-based funds and additional ETFs in here. But the bottom line is you can see in the 15-minute here time frame that momentum was really starting to shift about midday. So that's one of the key points of the MCM is it's designed to help you understand at a glance what the current condition of the momentum is in a specific time frame, and therefore help to reduce your risk of trading against that primary momentum. And then secondly, the goal is to help you understand when momentum is aligning so that you can catch that next impulse move. So we're going to look at that just here in a second. But what I'm going to do is I'm going to jump over and I'm going to look for here FSLR as an example. I'm going to click on that one. You can see it pulls up all the time frames that we cover with the MCM, and that runs from monthly to weekly, daily, 2-hour, all the way down to that intraday trader who's looking for the 15-minute and the 3-minute is how we've set it up currently. But I'm going to focus in here on the next piece, and that is that we have time frames as one view, but then this is where we've really harnessed the power of our momentum algorithms and proprietary technology. Is you can jump into our trader view, and I'm going to scroll back down again, and I'm going to look for FSLR as an example. Let's click on that one, and now I'm going to go into near term. So you can see that there's 4 different trading styles that we have pre-established into the MCM. So essentially, we're trying to trim out that homework for you and have an automated system that's tracking the markets, and then in a split second you can pick your time frame and you can find out what that trade setup condition is based on our 3 time frames and 2 specific momentum indicators. But let's get back to FSLR. I'm going to look at the near term, and you'll notice here that in the middle we have it highlighted as the directional bias. So that's our primary directional bias. And what happens is when there's further alignment in other time frames, then you'll see the trade setup condition will suggest an overall direct position bias. So at this time, you can see FSLR is suggesting a very bullish trade setup condition. Now let's take a look at, though, when the directional bias shifted in FSLR. So you can see here this is Central Standard Time. It was on 227 at 10:30 and then 2:45. So if we look at 227 at 10:30 a.m., you can see that this was before we had that big spike up in FSLR, that big gap on earnings. So again, the goal is to, 1, prevent you from trading against the dominant directional bias in that trader style of your choice, and then 2, get you in a position where you're alerted when there are a trade setup condition in terms of alignments between momentum conditions, giving you something that would be a bullish or bearish. So I'm going to jump back here one more time to give you a peek. So we have those 2 different examples of views you can have, from the time frames view to the trader view, and then you can select your trader types. So let's go back to intraday, and then you can scan and you can just look for those that are setting up bullishly. And you can see that the system just pulls those out in particular. I'm going to stop that. And then you can also then just sort. So if you wanted to sort by those starting from very bullish to then the bearish conditions, including even neutral. So if you're an options trader, it's a great way to find symbols that are in conflict in terms of the momentum conditions, it might be some premium selling opportunities. All right, last one I'm going to look at here. Let's take a look at the SPY. Everybody likes to look at the SPY. So the SPY, you can see here right around 12 p.m., the directional bias shifted to positive, and then that was in the reversal scout, and then the slim ribbon at 1:15 p.m. So how did that look in real time on a chart? Well, you'll see here, if we look at this is our multi index grid here with the SPX, NDX, and RUT, but you'll see right around that 12 p.m. time frame that was indicated on the MCM that we started to get this shift. And it would have really alerted you that there was something internally changing in terms of momentum. And then we got that, again, what we're looking for next is that big impulse move to try to create a scenario where you're able to capture that opportunity. All right, that's what I wanted to share today. Wish everybody all the best, and make sure that you check out the MCM right now. It is available free in beta. And if you become a level 4 member, you will get the MCM standard premium version as part of your membership.
Matt, that blows me away. It is so fantastic. Become a level 4 member, subscribe, and get that great deal. And you will get the market condition monitor included at no additional cost. You'll be grandfathered in for that. Stock market analysis and projections on the S&P 500. First, this important information. Just look over this slide. You'll get an idea of our analytical information, how we approach the markets, and of course, a little disclaimer in here. So please take a moment to read this. Stop the video. Stock market, S&P 500, short-term view, a fake bounce and more trouble. That is what I believe, as I show you this multiple time frame analysis and give you this a lesson on cycle analysis. So let's take a look here as we look at the S&P 500. So this is SPX. And for those of you that are brand new and not familiar with the analysis that we bring, we do cycle analysis. And on the bottom are cycle brackets. They are simply a tool, a drawing tool that helps us see the energetics in the market. And cycles are measured from trough to trough. And you can see there are cycle periods in here in multiple time frames. In this case, the dominant cycle, as we see it right over here, made a low here. That's that cycle line right there that you see, and made a low here. That's the cycle line, and made a low right here. And you can see the beautiful rhythms in here in the market. What I really want to focus on is the minor cycle and the great messaging in the minor cycle. You can see in here where the minor cycle bottomed right here. And then, because this was way above where this started, this cycle, it said that the next minor cycle was likely to be driven up by this upward momentum and make a higher high, and it did. These yellow areas are the periods of risk, and when they occur late here, there's not a lot of time for them to decline. When the peak is earlier in the cycle, and you could see the minor cycle right over here, that almost broke down, that's the negative messaging right there, the failure at the peak, and then breaking under here and declining for another week and a half. That set up what was looking like a fairly negative situation, but then the minor cycle right in there formed a bullish pattern again. You can see that the configuration gave you a higher bottom right there, and that said that the next rally was likely to continue up. Now you'll see our slim ribbon turn positive right over here, our slim ribbon PO on the bottom. These are this is a level 4 special indicator study that we have, and you can see these positive resumption signals that you got right in there, and that was telling you the market was still strong. And note the period of risk right in here was short in duration also. Then something very significantly changed, and that is when this next rally came right in here, it failed very quickly. This was supposed to come up here and test this high or get higher. We had a higher projection as a possibility up over here, but then when it got under this low at 40.6079, which we warned about, we said this is a very negative condition. It is suggesting that the intermediate longer term patterns are pushing to the downside, and we came up with our bearish scenario. So here is that minor cycle right in here that you can see, and that is in a negative configuration, what we call a left-hand translation, where it peaked way on the left side of the cycle. And what that says is this next minor cycle right in here is likely to also give you a negative formation. Yes, we have had these minor resistance sell zones here on our charts, saying that we thought when the bounce came in the minor cycle, that would get you up to those levels, and then it would fail and begin to come down again. So the next period of risk, which coincides with the weekly chart and that period of risk that we've been discussing, is right in this time frame right over here. So I'm just going to bring that yellow period right in there. That is the really significantly negative period. It says that when this rally is over with, and it might be a number of days still in here as it gets up into this minor resistance sell zone, that then when it fails, it's very likely to get under this level, and this is that area that we talked about of capitulation. The best case that we can make is testing this low over here after this rally's over with. That is a low probability. A higher probability is this black line, which points right down over here to about 3840 in the S&P 500. So this then gets to begin into our 300 to 600 point target we've had on the downside. This is even a good possibility, 3755 right down over there. We had originally talked about testing the major lows down around 3500, but you could see we don't even have a projection in there because the time is running short on the intermediate patterns, and the likelihood of that has really been reduced. On top of that, the longer term patterns, especially the monthly, are giving indications that the bear market really ended in October. And this is a very positive overall shape that's being formed in here in the intermediate patterns. That says to me that there is likely a capitulation coming in here, but right now we're looking for worst case of around 37.55 with a likely move down to about 38.40. That will be our targets right in here. And this rally right over here is very doomed to fail. And this minor cycle messaging that we see in here is really telling us that. You can see positive here, negative here, and the probability of this second half of this dominant cycle in here bringing a hard sell in this period, which basically points to somewhere around the second week of March here into the third to fourth week of March here, with a possibility, you see this is out into late March or maybe even early April before this bottom comes, because when you get into hard sell periods, they tend to last a little bit longer. So we're allowing for the fact that this could run a little bit long, but in this bounce in here may only last a few days, and then we get into a period where it's very likely to get sold very hard again. After this period is over with, we get into the next rally stage out over here. And that's why I said early in the show that investors, well, this could be their best time or worst time for 2023 as we get into a period where the market is likely to get sold very hard. That will hurt some people, and that will help some that have kept their powder dry, as we have suggested, waiting for a better opportunity where we thought was going to be mid to late March or maybe in early April. That is a look at the short-term view of the S&P 500. I hope you found that incredibly illuminating. Okay, so that's it for what we're going to show you. Please do make sure that you become a level 4 member. We've extended out one more week that you'll be grandfathered in to have the market condition monitor if you are a level 4 member by March 12th. And you'll get everything that's on here. Please go to the top of the askSlim.com website, click the Learn More button, and you'll be able to see everything that's included in this and really get a good sense for the market condition monitor. Become a level 4 member in the next week, and you will have the market condition monitor at no additional cost. That'll wrap up this show. Go to askSlim.com and get acquainted. Become a level 1 member for just $45 for 3 months, and you'll get tons of information from us every day. On YouTube, subscribe to our channel, click that notification bell, and like this video, give it a thumbs up, and watch our member videos in the playlists. You'll get a good idea of what we do and see our past shows. On Twitter, follow us at askSlim, and any questions that you might have, write to Matt at askSlim.com. That's it for this show. I hope you found it incredibly valuable to you. I want you to be so careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to sit and